All right, dear students, today we are going to start internal controls. And this is one of the most important area of your F8 and the audit and assurance exam, internal controls. All right, when we started the audit planning chapter, we discussed the audit cycle, and let me write those things again. So the first stage of the audit cycle is audit planning. And once we are done with the audit planning, we assess the client's internal control system. Assessment of client's internal control system. And there will be two results. Either it is going to be strong or it is going to be weak. If the system is strong, we are going to do less substantive testing. If the system is weak, we are going to do detailed substantive testing. And once we are done with the substantive testing, either less or detailed, then there will be review. And the last stage is going to be the report. This is the audit cycle right in front of you, starting from the planning stage, audit planning. And then we do the assessment of client's internal control system. When we are assessing the client's internal control system, either the system is going to be strong or the system is going to be weak. And then we are going to do the less substantive testing or detailed substantive testing. Then there's a review stage. And the last stage is the report stage. When we are assessing the client internal control system to check whether it is strong or it is weak, we apply the audit procedures that is known as the test of controls. And in short, they are known as the TOCs. The test of control means we are testing the client's internal control systems. You see, we are assessing the client's internal control system. So the audit procedure we use to test the client's internal control system is known as the test of controls. And then once we are done with the system, we do the substantive testing, which is the testing on the client's financial statements. And this is known as the substantive testing. So you can say there are two types of the audit procedures. Two types of the audit procedures. Procedures to test client's system, and then procedures to test the client's financial statements. And we have already discussed this thing so many times that the figures are generated by the system. Like you talk about the sales system. For example, you go to a grocery store or superstore, and then you see a lot of things over there. Everything is being marked. The price is written over there. You cannot take anything without paying for it. When they are selling it, the inventory is reduced. When they're buying the things, inventory system is updated. So you can take out the monthly report, you can take out the quarterly sale report, and everything is being recorded over there. So I can say the system is strong. And when the system is strong, the figure generated by the system will be reliable as well. So we have discussed this thing a lot of times, and we'll be discussing again and again throughout the audit that the figures are being generated by the client system. So first of all, let's test the system and see how much it is strong or weak. If the system is strong, then there's no need to do the detailed substantive testing. Why you will be wasting of your time when the system is strong and the figures are reliable. So you can just rely on the less substantive testing. And if the system is weak, then we will be going for the detailed substantive testing because the figures are not reliable. So there are two broad categories, or you can say two types of audit procedure. The first one is to test the client system, and this is known as the test of controls. In short, they are known as the TOCs. And then we have the procedures to check the client's financial statements once we are done with the system. That is known as the test of details, or also known as substantive procedures. So a lot of students are confused in these two things. They didn't know the difference between the test of controls and the substantive procedure. Remember, both are the audit procedures. Before getting into the financial statements, we do test the client's internal control system, and the audit procedure used to test the client's internal control system is known as the test of controls. Once we are done with the system testing and we have developed our audit approach, then we'll be going for the substantive testing. Okay, fine. We have discussed this thing. Now, we are at this stage of the audit. We are done with the audit planning. We have done the understanding of the entity. We are done with the risk assessment, auditor responses, everything. Now we are assessing the client internal control system, because we need to see whether the system of the client is strong or the system is weak. Remember, we do not have any obligation, statutory obligation, to report on the client's internal control system. No, although we do a courtesy, we have discussed that thing in the chapter number 1, that while we are testing the client internal control system and we have seen their weaknesses in their system, we know the implications of that. So we do provide them the recommendation on their system in the management letter. But that is not something, the real obligation of the auditor. The real obligation, the real responsibility of the auditor is to comment on the truth and fairness of the client's financial statements. And internal control system testing is part of that. So there's a question which needs to be answered. And the question is that why we are assessing the client's internal control system. So the question is why the auditor is assessing the client's internal control system. Why we are assessing the client's internal control system. So the answer to this question is to develop the audit approach. To develop the audit approach, whether to go for less testing or detailed testing. So in other words, you can say we are assessing the client's internal control system to see how much we can rely on that. So if we can place more reliance on it because it is strong, then as a result, we'll be doing less testing. If we are unable to place any reliance on it or less reliance on it, then we have to do the detailed testing. So the main objective of assessing the client internal control system is to develop the audit approach. And what is the audit approach? Whether to go for less testing or the detailed testing. And that's it. This is the answer to this question. All the activity which we'll be doing in assessing the client internal control system is just to make sure that we develop an appropriate audit approach. Because if the system is weak and we are doing the less testing, then this will increase the audit risk. And you know the audit risk. That audit risk is the risk that the auditor may give the incorrect audit opinion on the financial statements being audited. So if you have developed the incorrect audit approach that you should have done more testing and you have done less testing, then this will definitely increase your audit risk. So it is vital, highly significant, highly important for the auditor to develop the appropriate audit approach, whether to go for less testing or detailed testing. In simple words, again, we are checking how much we can place the reliance on the client internal control system. If it is strong, the client's management and the client's internal auditor has done appropriate working on that, and the system is strong. Now, why wasting time on doing the detailed testing? Because we already know that the system is strong, the figures are reliable. The less testing will do the work. But if the system is weak, then you have to make sure that you are doing the appropriate level of the audit testing, that is the detailed audit testing. So we have discussed that we have to assess the client internal control system in order to develop the appropriate audit approach, whether to go for less testing or detailed testing. Now, when we are talking about the client's internal control system, which system it is? So we are continuously saying client's internal control system, client's internal control system. What do we actually mean by this client internal control system? So client's internal control system. Client's internal control system. So when we say the client internal control system, it simply means the sales system, the purchase system, the inventory system, the non-current asset system, the payroll system, and the bank and cash system. So in the exam, you get a question which is mostly a case study, a long question, like a case study of almost a full page and sometimes 1.5 page, in which the examiner give you either the sales system, purchase system, inventory system, non-current asset system, the payroll system, bank and cash system. And the examiner asks you either and mostly to identify the deficiencies, like mostly in the exam, the examiner asks you to identify the deficiencies in the system. And not only deficiencies, you have to identify, you have to write the explanation of that. That means what is the impact of that deficiency or the weakness on the client's internal control system or the client's business. And then the examiner asks you to provide the recommendation as well. So mostly the examiner asks you regarding the deficiencies. But sometimes either alongside the deficiencies or separately, we got the question on the key controls, or you can say the strengths in the system. The deficiencies are the negative things in the system and the strength are the positive thing in the system. Let me give you a plain example from your real exam. And then you will identify one more thing regarding the internal control system. So first of all, listen to the example. The example is that the entity sells goods online and they use a courier company to deliver the goods to the clients or the customers. When they deliver the goods to the customers, they do not take the signature on the delivery note. This is what was written by the examiner in the case study, that when the goods are delivered to the customers are not required to sign the delivery note. Now, obviously, this is a weakness because you probably have received many couriers or the parcels in your real life. When someone is delivering you the parcel or the courier, they give you a document to sign it because it's an evidence that you have received it. So if they are not asking you to sign the delivery note, later on, if you do not have any integrity, later on the customer, if do not have any integrity, they can just claim that I have not received the goods. And obviously the company will not be having any evidence as well. Then as a result, they have to deliver them again. So the deficiency is that they do not require a customer to sign the delivery note. The impact of this weakness is that the customer can later on claim that they have not received the goods. And as a result, the company needs to provide them again, which will be eventually a loss for the company. Now, the recommendation is that the customer should always be asked or required to sign a delivery note. This is the plain recommendation. Let me give you another deficiency example from your real exam. It was written in the payroll system that employees decide how much overtime they are going to perform. Now, you know, overtime is not free. The employees are being paid in the overtime, and mostly they are paid time and a half. That means 150% of their standard pay. So everyone wants to do the overtime because they will be getting a huge amount of money for it. And employees themselves are deciding how much overtime they will be performing. This was written in the real question. I'm not assuming this example. This is a real example. Now, obviously, this is a weakness when the employees are deciding themselves that how much overtime they will be performing. They will be setting up more overtime hours in order to get more payments. And as a result, the payroll cost of the company will rise unusually. The recommendation is the production manager or the production supervisor should decide the number of hours employees are going to perform in terms of overtime, because they know how much the work is, how much the workload is, how much the hours are required over there. So this is the recommendation. Now, obviously, you got both of these examples, and you have not studied any sales system, payroll system yet, but you were able to understand the examples because this is based on the common sense. This is based on the common sense. Now, let me give you another example. Let's assume from the purchase system, the real life example, the real exam example. In the exam, the examiner said when the order is placed for the goods, the stock level is not checked before that. The stock level is not referred while placing the order. Let's assume you are ordering something for your house. Let's assume the grocery, the monthly grocery, and you didn't check how many items are still there in your kitchen. Let's assume the mayo is over there, the ketchup is over there, the sauces are over there. You haven't used it; they are not yet finished, and you just ordered it again. And then once you ordered it, you realize, okay, this was available in my kitchen. How did I order again? And now obviously, if you're not using it, the food items will get expired, and that will be wasted. Your money will be wasted. So if the company is not looking at the stock level before the order is placed, they may order the goods which are already in stock, and as a result, they will be bounding their money in the goods which are not required. The money is being bound over there. They can take the benefit. There's an opportunity cost for that. So the recommendation is that whenever the order is placed, the stock level should be referred before that to see how many items are in stock and what you need to order. Now, obviously, this example is being understood as well, and you haven't studied the systems yet, because most of the questions in the exam are based on the common sense. Based on the common sense. Let me give you another example now from the inventory system. Like in the godown, in the store, in the warehouse, there is some high value inventory. That means the expensive. And in order to access that inventory, there's a code for it. And everyone is aware of that code. Everyone is aware of that access code. And that is the high value inventory. Now, what is the impact of this weakness? Anyone can access the warehouse unusually and can steal those high value goods. There's a high risk of theft being over there. The recommendation is that code should only be disclosed to the senior management. And not everyone should be aware, should be educated, should be learned regarding that code, access code. Now, I have given you the example from almost every system. Now we can take an example from the bank and cash system as well. Again, the real exam example. The examiner is saying the entity is dealing in the cash and they received a huge amount of cash on the daily basis, and the cash is not banked daily. Now, when they are dealing in the cash, when they are selling the goods on the cash and they are receiving huge amount of cash and they are not banking it daily, then there's a risk of theft that the cash may be stolen. There may be a robbery as well. So the recommendation is that the security company should be contacted. There should be a contract with the security company to daily pick up the cash, and then it should be deposited or submitted in the company's bank account by a security company, or via a security company, or through a security company. Now, all of the examples which I've given to you, that those examples are clearly understandable, and still you haven't studied any system yet. How come it is possible? It is possible just because of the common sense. So most of the question in the exam will be based on the common sense, your general life knowledge, real life knowledge. So in the exam, mostly the examiner is going to ask you regarding the deficiencies, and I've given you so many examples of this now. And there may be some requirement related to key controls or strengths. Now, for example, the examiner is saying whenever the goods are delivered to the customer, signatures are always taken on the delivery note. Now, this is a strength opposite to the weakness. Even the explanation will be opposite to the weakness. The customer cannot later on claim that they have not received the goods, and the company will be having an evidence as well for the transfer of the goods to the customers. Now it is written in the exam, the payroll supervisor or the production supervisor decides how much overtime the employees are going to perform. Now this will make sure that the employees are only doing the work which is required. They are not sitting idle and claiming for the extra hours. This is the explanation of the strength. So weakness has the negative impact on the business, and the strength has the positive impact on the business. So the client's internal control system means either the sales system, purchase system, inventory system, non-current asset system, payroll system, bank and cash system. It can be anything in the exam. It is going to be a full, huge case study of a page and a half. And the mostly examiner is asking you regarding the deficiencies, but they may ask you alongside or in a separate question regarding the key controls or strengths as well. So now you need to understand few terms regarding the internal control system. Now these terms are very important for the exam question as well. So we are going to discuss three terms basically in detail. And there's a fourth one as well, which is an extension of the third one. So the first term is the control objective. The control objective. The second term is control activities. The third term is the test of controls. And the fourth term is reason for each test. So these are the four terms that we are going to discuss. Control objective, control activities, test of control, and the reason for each test. Now, first of all, what is the control objective? Now, behind every control, there's an objective. Like, for example, why you are taking the classes? You are taking the classes because you want to eliminate, or at least you want to reduce the risk of the failure. Because when you're doing self-study, there is a risk that you may drift, you may not study it appropriately, you may not focus on the important areas of the audit, you may not have the exam focused techniques. That is why you are taking the classes. So the taking the classes is an activity, and behind that there is an objective that do you want to reduce the risk of the failure. Like we have a locking system in our cars. When we do lock the car, what is the objective behind that? We want to secure our car from theft. So when we have an activity, like for example, we are locking the car, we are locking the house, there is an objective behind it. For example, a person who is working on a construction site is wearing a costume, a proper helmet, a proper costume, a proper dress, a proper glasses. Now, why he is doing that? Because he wants to save himself from the unusual activities, like for example, anything like the fire and things like that. So that's why they are wearing the protective goggles and the helmets and things like that, the costumes. So control objective is the reason behind the control. Reason behind the control, that why you need to implement this control. Reason behind the control. And the control activities is the activity or the activities to achieve the control objective. For example, I want to save my car from the theft. Now, what I need to do, I need to properly lock my car. You want your cash not to be stolen. You have to keep that thing in a particular safe, or for example, in a bank in the locker. So the control objective is the reason behind the control, and control activity is activity or activities to achieve the control objective. And then we have the test of controls. Test of control simply means testing the client's control activities, or you can say the control system. And the reason is to ensure control objective is met. Now, I'll be taking an example, and with the help of example, you will be understanding what is the control objective, what is the control activity, what is the test of control, and then we have the reason for each test. So the first example from the sales system. Credit should only be given to good credit rating customers. Credit should only be given to the good credit rating customers. This is our objective within the sales system, that not everyone should be given the credit, because there may be customers who cannot pay back, they're not financially good, and as a result, there may be bad debts, there may be irrecoverable debts, there may be a loss of sales, loss of customers. So the credit, if the company is offering, should only be given to good credit rating customers. Now, how would the company know that these are the good credit rating customers? So the activity they need to achieve this objective is that credit worthiness of customers should be assessed through a credit rating agency, or themselves if they can do that. So they have an objective that credit should only be given to good credit rating customers, because if they're offering credit to everyone, they may be the bad debts and they may be irrecoverable debts. Now, how would they know that the customer is having a good credit rating? They need to assess the credit worthiness of the customers through the credit rating agency, or for example, if they can do themselves, then it's fine. So deciding the control objective is something related to the management, that the system is being designed and implemented by the management. Auditor has nothing to do with the implementation and the designing of the client system. The management will be involved in designing and implementing the client's, their internal control system. And similarly, control objective is when they're designing the system. Control activity is when they're implementing the system. Both are the concerns of the management. Auditor has nothing to do with either the control objective or the control activities. Okay, now we are coming towards the test of controls. The test of controls is simply testing the control activities of the client, testing the client's internal control system. Now, if they are saying that they have assessed the credit worthiness of every customer before allowing them the credit, now they should have a credit report with them, because they have assessed the credit rating through a credit rating agency. Now, it's not a verbal thing. Probably they have given them a report in which they have mentioned how much credit the company should give to a particular customer. So the test of control is inspect the report given by the credit rating agency. And not only this, you can go a bit further. Compare the suggested limit with that of customer ledger. Now, for example, you ask them, do you have the credit rating report? And they say no. Then obviously they are lying and they have not assessed the credit rating of that customer. The system is weak. If they're saying, yes, we do have the credit rating report, we'll be telling them, okay, give us the credit rating report. We'll be inspecting that credit rating report. And then the credit rating agency has probably suggested them the limit that you should allow this much limit to this customer. So we are going to compare the suggested limit on that credit rating report with that of the customer ledger. Let's assume the credit rating agency suggested that you should not give this customer a credit of more than $100,000. And we see there's an outstanding balance in the customer ledger of $300,000. So that means, again, the system is weak. They have assessed the credit rating of the customer through a credit rating agency, but they have not followed their instructions. So the system is weak. So with the help of the test of controls simply means testing the client's internal control system. With the help of the test of controls, we are going to analyze, we are going to evaluate, we are going to assess whether the system of the client is strong or weak. Now, why we are applying the test of control? What is an objective? What is the objective behind that? So to ensure that credit is not offered to bad credit rating customers. Now, a question may come to your mind that when we are assessing the client's internal control system, isn't it the business we are testing? Isn't these the business risks we are analyzing? Yes, it sounds like a business risk. It sounds completely like a business risk. But this thing has a direct relationship with the financial statements. Now, for example, credit should only be given to the credit rating customers, good credit rating customers. That means they're not giving credit to everyone. They are assessing the credit worthiness of the customers, and only the good credit rating customers are being offered the credit. Now, when we tested the report, we analyzed that no, they have not assessed it properly. And even if they have assessed it, they have not followed the instruction of the credit rating agency. They have given excessive credit limits to the customers. Now, when they have given the excessive credit rating to the customers who are not even able to pay them back, then there are the high chances of the bad debts. And if they have not recorded the allowances and the provisions related to the bad debts, they may have overstated their receivables. Now, the direct impact of the system being weak is that we are going to extend the substantive testing afterwards. So if the system is weak, then we are going to perform the detailed testing on the financial statement, because from the system, we can see their receivable balance is not reliable. If it was reliable, then we'll be doing less testing. If it is not reliable, we'll be doing detailed testing on the trade receivable balance. So this testing has a direct impact on the further substantive testing. System is strong, less substantive testing. System is weak, detailed substantive testing. So these terms, the control objective, the control activities, the test of controls, and the reason for each test are very important for the exam. Now, how these will be tested in the exam? This is a question that may come to your mind, how these terms are going to be tested in the exam, or what is the exam implication of these terms? When you talk about the control objective, usually examiner has a practice to ask these control objectives in a straightforward way. Explain or write 4 objectives of the sales system, 5 objectives of the purchase system, 3 objectives of the cash system. So this is the knowledge-based thing, and clearly you can see those things in my handouts. Now the control activities, because I have already told you that the question majorly asks you to identify the deficiencies. And after the deficiencies, they ask you to provide the recommendations. So control activities are something related to the recommendation. You will be telling that how they can fix their weakness. Test of control is when you are testing the client's internal control system. So test of control is something related to the auditor. And again, the reason is the auditor should know why they are applying the test of control. So the control objective, the designing and the implementation of the system is the responsibility of the management. So auditor has nothing to do with the management's control objective and the management's control activities. They are supposed to design and implement the system. Auditor is only concerned regarding the test of control. Test of control that should be applied to test the client's internal control system. If the system is strong, we are going to do less testing. If the system is weak, we are going to do the detailed testing. All right, let's take another example to understand these four terms. Okay, the first thing, only goods which are required should be ordered. Only goods which are required should be ordered, because if you are ordering goods which are not required, then the company will be bounding their cash within the inventory which is not required. They will be losing the money in terms of the opportunity cost. And obviously there will be more handling cost because they were having the inventory which they have ordered it again. They have ordered the inventory which is not required. They will be holding cost, and the inventory may get obsolete, inventory may get damaged. So that's why the company is concerned that only goods which are required should be ordered. This is the control objective. What is the control activity? So in order to avoid such weird situation where you are ordering goods which are already in stock, so you can just fix this thing by referring to the stock level before the order is placed. Stock level should be checked or referred before the order is placed. Stock level should be checked and referred before the order is placed, because if you're checking the stock level, you would know how much inventory you're going to order, how much quantity you're going to order, which inventory you're going to order. Now, test of control. Test of control means testing the client's internal control system. The client is saying, we do check the stock level before the order is placed. So first of all, you can discuss, inquire from the management, inquire from the purchase manager or procurement manager, whatever you call it. Inquire from the purchase manager whether they check the stock level before order is placed. Now, you may be thinking right now that obviously he's going to say yes. He's going to say, yes, I do check the stock level. Inquire from the purchase manager whether they check the stock level before order is placed. And relevant documentation should be reviewed. Like when they are checking the stock level, obviously they will be having a stock list in front of them. They will be obviously they're filling those things, filling the forms, ticking it, and again making the signatures on that, so we can review that documentation, that when they were checking, do they have done any documentation, so we can review that documentation. So inquire from the purchase manager whether they check the stock level before the order is placed. And the objective is simply to ensure goods which are not required are not ordered. Because if the system is strong, we can place reliance on their inventory figures. If the system is weak, that they place the order for anything before checking the stock level, then they may have the significant level of inventory which may be slow moving, which may be damaged, which may be old, aged, And as a result, they need to write off that aged inventory, slow moving inventory, inventory which has been damaged, which has gone obsolete. So that is what I'm saying to you, that if system is strong, we can place the reliance on the figures. If the system is weak, we have to perform the detailed testing. So these are very important terms you need to understand in terms of exams: the control objectives, the control activities, the test of controls, and the reason for each test.